Good afternoon, everyone. This is Harmeet from Sigma Picks. Thank you for tuning in. Today, we're going to be doing a review of three major ETFs that represent majority of the market. We'll be looking at SPY, QQQ, and IWM. All right, let's get started. Just so we know where we are, I think we have completed a larger degree fourth wave. We came into it with an ending diagonal that completed the fifth wave, and we saw a quick ABC that has now we're looking at it going up higher and getting into the 400s. I really think that SPY is really bullish, and of course, if you have seen my previous videos, I always refer back to how deep the pullbacks are that tell you how bullish the situation can be. Again, this pullback is between 23.6 and 38.2 of Fibonacci levels, comparing the fourth wave to the third wave. So the fourth wave versus the larger third wave. Okay, so we are within that zone, and clearly tells me, hey, the pullback wasn't very deep. Buyers came in, stepped in, and started buying as soon as the pullback came through. So the reason I'm saying that we are and may be done with the fourth wave is because we are above this level. Okay, we broke through it. That just tells me that we are on our way to go test this higher degree and check to see if we can break through to make all-time highs. I know markets have been kind of weird for a lot of ways, and people think that that they're gonna break down pretty big, but obviously they have not. They have been very resilient, at least SPY has been, and I do expect it to go ahead and make new highs within the next, maybe tomorrow, Monday the 29th, but definitely expect it to go much higher, and expect the fifth wave to be analogous to somewhat of the third wave. We will look at the targets once we get through the confirmation point. That probably be sometime next week. We'll put up another video regarding looking at SPY itself, but we are above some major areas. We are going higher. Looks like we will be testing this zone and getting ready to make all-time high from there on out. All right, so let's look at the Qs. Okay, so Qs also finished their larger third degree wave not too long ago, and I think we are done with this, the fourth degree, this pullback right here. I think we're done. It looked deep, but it's not very deep, relatively speaking, just because again, we look at the pullbacks and compare it to the last wave itself. So this pullback itself did not even go to the first fib level that I look at least 23.6, and that means the pullback from the third wave to the fourth wave. Okay, even though it was fast and furious, it does not look like that that it was, it's not as bearish as people think that it is. And I think that we are going to go ahead, eventually end up making new highs. Just to be aware that the one thing that I do want you to know that this is the target that I'm looking at within the next few weeks that we get to, or at least try to challenge this last high of the third wave. Okay, if we do not get through that, expect this to be the fourth wave to be not over, and then we will be in an extended flat, and that is still a very much a possibility, just because again we measure the strength of a trend with how deep the pullbacks are, and as you can see, the pullback for the first wave, this is our first wave, okay, to the second wave was 61.8%. That is a very, very, very deep pullback. That means the third wave itself, it has to get to at least, you know, to 33.79, and to make a new time high, that would be 127.2 up at 340 range, which is a little bit over the 338 range. So what does that tell us about what to expect when we do come to that area? If we do end up coming up here and testing that zone, expect that test to fail, just because the way the fib levels are set up right here. The symmetry, okay, the symmetrical move versus the symmetrical move, meaning this move and this move. Okay, so that is at 33.9. That's well below our confirmation level. Another one is at 127.38. That means if we get there, the most likely the pullback of the fourth wave, which we do not want to see go beyond this point right here, could come all the way back and test this level before making a new high. Okay, so just be aware that there is another level that is not up there, is the 161 level, 161.8 level. I think that may not be a value right now until we get past this 127.2 level. So which that means is that this has to, come, find support, and then go over there for a completion of the third wave that it'll be up here. Okay, so that's pretty much what we're looking at. It is not in as great shape as SPY is, but that does not mean that you shouldn't be bullish and going into next week. There was some buying came in. The bar was pretty big. It's above volume. Buying came in right here. So just be mindful again that we need to do this ETF needs to do some work in order for it to get going higher, and it will need and require a lot more momentum in order for it to break through these two level and the confirmation point to get to 161 level somewhere up here, and we'll look at that when we get there. All right, let's look at the next ETF. Okay, so the next ETF we're going to be looking at is IWM. It's in a little bit more of a consolidated state than the other two ETFs are, because we finished the first wave, larger degree first wave, and I think we have finished the second wave, but that does not mean we have gotten the confirmation that we have finished the second wave. Okay, we can still go and be in this mode, flat mode, going up and down. So reason why I think we're in a flat mode, and I've seen a lot of people call this the first wave right here, okay, and call this of the lower degree, and call this the second wave of the lower degree, and call this the end of the second wave for that specific degree right here. Okay, I think that's that's one of the valid things that people can be looking at, but I don't think that that is the case, because let's just quickly again, I measure everything by how deep the pullbacks are. It tells me what state the Elliot Wave analysis can be in, or the highest probability. First, we retraced most of this move back. Okay, that's 100% retracement. Okay, and we saw a little bit of overthrow effect. So that's just saying that it tried to test it and came all the way down, went all the way and retested it, and came down and retraced the whole gains that it had made. Second, I think we are in a second wave, but still in a very bullish manner, is because again, the pullback in the second wave has only been at 23.6, which is this degree, the higher degree level, okay, of this pullback so far. So can we expect it to stay in this kind of flat area? Absolutely. It could just, go be flat, and until we get over this point with some sort of momentum, and kind of see, let's just quickly look at that. What could be the expectations, with what I would like to see. I would want to see this come all the way up, okay, at least have the first wave come up to here, and then second wave pullback. I don't want to see a deep pullback again off this, so 38% or 23%, and then I want to see it go ahead and have this larger move going up to the 250 zone. This will take some time. The move that we've had a while back, it's just a very large move. This first wave was very large, but we still haven't gotten into the money wave, so just know that things are still very bullish with IWM. They can stay in consolidation for a little bit, and that's okay. And it does not get, this second wave does not get invalidated until we go beyond this point, which is number 2 right here, and that means we're looking at testing this zone, and that's okay too. It's not that big of a drop back, and let's just quickly look at where the 38.7, it's not, well, it's not there. Let me just pull it up, the ratio 38.2. Let's quickly look at that. Oops. Oh, no. So 194.6, so it's pretty close to that zone itself. So that would be a little while. I think it has to drop quite a bit, but the possibility is there of that, since we have not truly confirmed that the second wave is over. It's just a preliminary thing that I see as being a WXY combination, and that could lead us higher. So this IWM is more of in a consolidative state, relatively speaking, to SPY and QQQs. SPY, I would say, is somewhere in the middle, but this is very encouraging, the last thing. But again, the pullback on it was a little too deep for the second wave, and the third wave may not go as high as we would like to. So expect a throw over effect again, come back down, okay? And going back to SPY looks great. I think it's going to go ahead and break the all-time high probably coming this week, and we can expect it to go towards that 415, 420 region, and there are a lot of different sectors that are doing great, just because the tech sector is not doing good, or not doing as well as other sectors maybe. Just be mindful that the home builders, the utilities, the constructions, the energy, there are all these other sectors that make up the SPY sectors themselves, SPY ETF themselves, are doing really well. So there is money going somewhere, and you have to go and look at the sectors themselves to see where actually the money is going. Again, thank you for tuning in. I hope you were able to get something out of this, and I will see you next week with another episode of Elliot Wave Market Review. But also, please just keep a lookout for the quick takes. We do them once a day, looking at different charts and looking at different things that are setting up within the Elliott Wave world or harmonic world, or any other way that we can utilize and gain some profits, whether being bearish or bullish. Thank you very much again, and have a good day.